If this one weren't such a saga of the past couple of years, maybe people would be quicker to, ride alongside Berkshire here.
Well, I think it's a great point, but I want to be a buyer here, Kelly. And yes, to Pippa's point, down about 7% year to date, but in the last 1 year, it's up over 50%. And think about investors have been doing the hokey pokey inside of growth and value. They continue the hokey pokey. But what has been a theme that continues to connect with investors? It's energy. So if you look at a name like Occidental, yes, it's higher beta. Yes, it's 1/10 the size of an Exxon. But with the beta of like 1.77, nearly double the S&P 500, there is risk reward here. In the Berkshire Hathaway, Warren Buffett, I'm pretty sure Warren's got a pretty good track record. So I love the fact. I actually think that's a fortifying reason to own. But if you look at the chart here, it makes a ton of sense. Support here at $55. Technically, it looks like it has the ability. Short-term price target, Kelly, $75.
Wow. Wait, so is the hokey pokey a good thing?
Hokey pokey is a good thing because a lot of people have been trying to figure out growth value, which is best in the grappling, but nonetheless energy. And remember, Oxy was almost left for dead when it tried to acquire Anadarko, but here it is come back. It's the comeback kid. I don't know if you have the music ready queued up, but it's like LL Cool J, don't call it a comeback. They've been here for years.
All right, Pippa, thank you. Jeff, stay right there as we move along and talk Target. Everyone's watching for this one. Kind of the opposite story here. They had a bad 2022 and then a 13% gain to start this year. Big question, is the consumer pulling back? Have they worked through that inventory glut? Can they snap their streak of 3 straight earnings misses? Jeff, you like it?
I do like Target here, and it's fascinating. The retailers have been really mixed, and in the wake of Walmart, this is tough. We're coming into earnings season, but we have high expectations. They had a surprise last quarter to the downside. So I think what you see is go back a year ago on a chart. May kind of had that fall from grace, and there's a back and fill opportunity. Yes, this is a big number I'm about to throw out there, but $210. And I think the consumer, the strength of the consumer will be revealed. And I think a lot of the tangible lines that we've seen from other retailers, that's been priced in here. So I think it's priced in. It's been a sideways trade. It seems very coiled. 210 is where it wants to back and fill. It's an old technical term that we like to use on the floor, the Chicago Mercantile Exchange. That allows a lot of gaps to be filled back in from price and volume, Kelly.
All right, if it goes the other way, what levels would you be watching?
Well, I think you have to look right where it's trading right now. I think you can be aggressively selling puts, and I think the implied volatility is higher than usual going in this earnings expectation. So I think you have the opportunity to get paid a little bit as long as you want to own the retailer. A lot of folks don't want to own retailers. I think much of the inflation story has been priced into retailers. Therefore, this is the time to kind of wade into the water. All
right, we'll leave it there for Target then, who shares, by the way, about Unch today. Don't miss an exclusive interview with Target CEO Brian Cornell tomorrow on Squawk Box, 7 a.m. Eastern time. Sometimes I like to call that the CEO indicator. But anyway, let's get to Norwegian Cruise Lines, up 35% to start the year, but still carrying more than 10% short interest and expected to report a loss. Seema Modi, you've got the story. What is the deal with Norwegian?
Well, Kelly, as you know, the story for travel has been one of strength, right? A very positive view of the consumer that is willing to pay top dollar for a big trip or a big vacation. Royal Caribbean CEO Jason Liberty joining us just a couple of weeks ago here on this show, The Exchange, where he said that pricing power will improve going into this year. And that's going to be the question for Norwegian, which is much more skewed towards the luxury customers. Just how much elasticity is there with cruise ticket prices, especially in Europe? How does it view new competition from the likes of Marriott, which debuted its Ritz-Carlton yacht last week, which we were on? These are smaller vessels that can get into ports that larger ships can't. I've been speaking to a number of travel agents, and from what I'm hearing, customers are very receptive to this idea. And then, of course, for the cruise lines, Kelly, it does come down to their balance sheet. Analysts have been cautioning that of the 3 major publicly listed cruise lines, Norwegian has the most work to do to bring down that debt. So that will be a key topic tomorrow.
More so than Carnival, Seema?
That's exactly right. Yeah, they have about $2 billion in maturities, I believe, coming up in 2024. So with the rebound we're seeing in bookings, does that give them more of an opportunity to bring down that debt and improve the balance sheet for customers? Clearly, investors have been thinking that that will play out with the stock up over 30% this year.
And maybe it's, Seema, thank you, a reminder, Jeff, that the timing of those debt maturities as important as anything else. I mean, this is going to be a major reset for a lot of names.
You're absolutely right. And I don't think this sink is going to ship. See what I did there, Kelly? But at the end of the day, if you remember, we were talking about Carnival in Q4 on your show, where I like the space, I like Carnival, and I like Norwegian, but it's a timing component. It's had a wildly impressive year to date, and you're never going to go broke taking profits. So I want to be a seller here, or more of a profit taker, if you will. You look at a very high beta stock here in Norwegian. It's $7 billion in market cap. When we talked about Exxon earlier, we talked about Chevron, that's $450 billion. So think about, this is a very small company, has the ability, high risk, high reward. But I think we're going to be really focused, and Seema brought up a great point. You have to be focused on that forward guidance, the business conditions. We want to understand their perspective. Is 2023 going to be as robust as it is? But right now, right here, you have to take a profit.
All right.